So, you've probably heard the terms crypto, Bitcoin, digital money. It can sound pretty complex, almost like a foreign language. But, at its core, the idea is actually quite simple. Digital money is just a new form of currency that exists entirely on the internet. It's not something you can hold in your hand like a dollar bill or a quarter. Instead, it lives on a secure global network of computers. This new kind of money is changing how we think about value, ownership, the internet itself. We're going to break it down piece by piece, so by the end, you'll have a solid baseline understanding. The big deal with digital money is that it can operate without a middleman. Think about how you send money right now. These companies are central authorities that process and verify your transactions. Digital currencies, on the other hand, often use a technology called blockchain. A blockchain is essentially a shared public ledger that records every transaction. It's distributed across thousands of computers worldwide, which makes it incredibly difficult to tamper with or shut down. This decentralized nature is what gets so many people excited about its potential for the future. Now, why does this matter to you? Well, this technology opens up some interesting possibilities. It could make sending money across borders faster and cheaper. It could give people in countries with unstable financial systems a way to protect their savings. And it's the foundation for a whole new generation of internet applications, often called Web 3, where users have more control over their own data and digital assets. It's still early days and there's a lot of hype and noise, but the underlying technology is genuinely fascinating. That's why it's worth taking a few minutes to get a handle on the basics, even if you don't plan on investing. To help us navigate this, we can even lean on artificial intelligence. Let's start with the two biggest names you'll hear, Bitcoin and Ethereum. First up is Bitcoin, with the ticker symbol BTC. This was the one that started it all back in 2009. The simplest way to think about Bitcoin is as digital gold. Its main purpose is to be a secure store of value and a new kind of payment system that isn't controlled by any single government or company. One of its key features is scarcity. There will only ever be 21 million Bitcoins created. This fixed supply is a big reason why some see it as a hedge against inflation, similar to gold. Then you have Ethereum, which goes by the ticker ETH. While you can send and receive ETH just like Bitcoin, Ethereum is much more than a digital currency. It's better to think of it as a global, programmable computer. Developers can build and run decentralized applications, or dApps, powered by smart contracts, programs that execute when conditions are met, all without a middleman. This has made Ethereum the foundational layer for thousands of projects, digital art and collectibles, NFTs, and new forms of finance. Bitcoin Talk centers on store of value, security, and adoption. Ethereum Talk focuses on new apps, upgrades to lower fees, and a decentralized internet-based layer. Once you look past Bitcoin and Ethereum, you'll discover a vast universe of other cryptocurrencies, altcoins short for alternative coins. There are thousands of them out there, each one typically trying to improve upon the original formula or serve a specific niche. Some focus on being faster and cheaper for payments than Bitcoin. Others compete with Ethereum as developer platforms for dApps. It's a space filled with experimentation, exciting, and a bit chaotic. Solana, SOL, is known for incredibly high transaction speeds and low fees, great for high-activity apps. Cardano, ADA, takes an academic, research-driven approach focused on security and sustainability. Avalanche, AVAX, is another major competitor in the platform space. Each project has its own community, technology, and vision competing in the open market. Altcoins are generally riskier than Bitcoin or Ethereum and often more volatile. Prices can skyrocket on hype and then crash. That's why doing your own research is critical. Today, Solana is about $250, up 8% likely driven by a popular new game launch. Cardano at 75 cents is relatively flat, as investors await the next development phase. Altcoins often move on project-specific news, partnerships, and upgrades, not always in lockstep with Bitcoin. Following the crypto market doesn't have to be intimidating. You don't need a 6-monitor trading setup to get the basics. Start with simple numbers: the current price of a coin, the 24-hour change, and the market capitalization price times circulating supply to gauge size and significance. When you're ready, use a simple line chart. Set time frames like 1 month, 3 months, or 1 year for a bird's eye view. Is the line trending up, down, or moving sideways? Focus on major peaks and valleys over longer periods. You don't need complex tools. Forget Fibonacci retracements and Bollinger Bands for now. Sharp spikes or drops often correspond to big news: a partnership, a security breach, or new government regulations. Example: Ethereum shows long sideways action, then a 3-month rise. Search recent ETH news. You'll find upgrade stories, institutional adoption, and new dApps. Connect price action to real-world events. Not all digital currencies are designed to be volatile. Stablecoins aim to stay stable, usually pegged to the US $1 token, $1, often backed by reserves. People use them as a safe haven and for payments and transfers without wild swings. Central bank digital currencies, or CBDCs, are government-issued digital money centralized and aimed at efficient, accessible payments. The US, China, and the EU are actively researching and piloting CBDCs. The crypto space is in constant motion, with new projects and tokens launching almost daily. A token is a digital asset built on an existing blockchain, most commonly Ethereum. Tokens can grant voting rights, pay for services, or represent real-world ownership. New tokens debut via a token generation event distributing tokens and raising funds. Launches can spark speculation and sharp early price moves high risk. Look past hype. Focus on fundamentals. The problem, the team, the tech, the tokenomics, and whether there's an active community. For example, Aura Network recently launched Aura to power a decentralized social platform where users own their data, rewarding early users for utility, not just speculation. By contrast, many meme coins launch with no clear purpose, just quick trading. We've defined digital money, Bitcoin, Ethereum, explored altcoins, learned simple chart reading, compared stablecoins and CBDCs, and touched on new token launches. You don't need to be an expert, just learn the fundamentals. Follow reputable news, use a price tracking app, and if you ever buy, use a well-known regulated exchange. Only invest what you can afford to lose. The goal at the beginning is education, not getting rich quick. Stay curious, stay safe, and take it one step at a time.